Welcome to the deep dive. Today we're jumping into, the really dynamic world of mining, minerals, and metals. It's often behind the scenes, right?
Mm-hmm. Very much so.
But the week between July 6th and July 11th, 2025, actually saw some, pretty wild developments.
It's definitely some significant moves.
So our goal today really is to give you a shortcut. We want to unpack the big shifts, specifically in rare earths, copper, and gold. We'll pull out the key insights, maybe some surprising bits too.
Yeah, distilling it down. We're looking at a Skilling's Mining Review roundup, plus some details from Wikipedia and the Financial Times to round it out.
Exactly. A quick download so you're up to speed. Okay, let's dig in.
Let's do it.
So first up, this global push for nations to, lock down their own critical mineral supplies. The race for rare earth independence seems, it's front and center, isn't it?
Absolutely. It's a major theme.
We saw the U.S. Department of Defense, for instance, announce this really significant investment, $400 million in MP materials.
Yeah, that was big news.
And what's really striking, I think, is that this makes the Pentagon the largest shareholder in the company.
Right, which signals a very direct strategic interest.
Precisely. The aim is clearly to boost domestic production of rare earth magnets. These things are critical for, everything from EVs to defense tech, and really cut down that reliance on foreign sources.
Cutting the cord, essentially.
And it's not just about that one company either. You have Ramaco Resources breaking ground in Wyoming. First new coal mine in 50 years.
Which sounds counterintuitive at first, maybe.
Right. But they're not primarily after the coal. They're aiming to extract rare earth elements from the coal deposits. So it shows this broader strategy emerging, looking for different sources.
Diversification.
Yeah.
And stepping back, you can really see the global market reacting to these U.S. moves.
How so?
Well, it's fascinating because it's not happening in a vacuum. After that MP Materials deal was announced, you saw Australian rare earth stocks, companies like Lynas Rare Earths, Iluka Resources, they jumped quite significantly. It reflects this wider sort of market optimism, maybe, about potentially reducing dependence on, the dominant Chinese supply chains. Mm-hmm. It's not just one investment. It feels like nations collectively trying to rebalance things.
Yeah, rebalancing the whole system. That makes sense. The speed governments are moving on rare earths is noticeable. But that kind of policy intervention, it's not just limited there, is it? We saw something maybe even more dramatic with copper this past week.
Oh, absolutely. The copper market got a real jolt. President Trump's announcement, a 50% tariff on copper imports kicking in August 1st. That sent shockwaves.
Shockwaves is right. Bull doesn't quite cover it. And the market reaction was, instant and pretty wild. U.S. copper futures shot up 13%.
13% in one day.
Yeah. Apparently the steepest single-day increase since way back in 1968. The stated goal is, stimulate domestic production.
Mm-hmm. Encourage U.S. mines.
But this obviously has much bigger ripples, doesn't it? It's not just about American producers.
No, definitely not. It's a real tightrope for global trade.
Yeah.
You've got major suppliers to the U.S. Think Chile, Canada.
Right. Key partners.
Exactly. And they're already voicing concerns because a 50% tariff, that could seriously rewrite how copper flows around the world.
Yeah.
Sure, U.S. producers might see a short-term benefit.
Maybe.
But analysts are already flagging potential inflation risks here at home and just general disruption to the global supply chain. It definitely puts pressure on those long-standing trade relationships.
It really does. Okay, so while copper's on this tariff roller coaster, gold, the classic safe haven was telling a different story. Kind of contrasting, actually.
Yeah, gold had a different feel this week. More about expansion in some ways.
Right. On one hand, the outlook for production seems pretty positive. We heard about several new mines starting up in 2025. Places like Canada, Burkina Faso, Australia.
Mm-hmm. Adding capacity.
And together, they're expected to add something like 724,000 ounces of annual capacity, which, suggests investors are still pretty confident in gold.
That growth definitely points to confidence, yeah. But like you said, there's a contrast, a stark one.
The Mali story.
Exactly. Reports of helicopters being used to extract, $117 million worth of gold from a barrack mine in Mali.
Just unbelievable.
It's a huge number, and it's a stark reminder, isn't it? While you have these new projects kicking off, signaling confidence in stable regions, the reality in other places can be incredibly challenging. Security, governance, it highlights the huge operational risks.
Yeah, massive risks. So, okay. We've got nations scrambling for resources, dealing with tariffs, security nightmares. It makes you ask, what's the actual cost? beyond the dollar figures.
The human and environmental cost.
Exactly. And this past week brought a really brutal reminder of that side of things, the environmental and ethical crossroads the industry is constantly navigating.
You're talking about the disaster in Zam.
Yeah, that tailings dam collapse.
Yeah.
Just devastating. At a Chinese-owned copper mine.
Released something like 50 million liters of toxic waste, right, into the Kafu River.
50 million liters. And that river supplies water, supports agriculture for millions of people. It's a catastrophe.
It really puts the spotlight on the risks, doesn't it? The inherent dangers in mining, especially as demand ramps up, and the absolute critical need for strong environmental rules and enforcement globally.
Enforcement is key, isn't it? It makes you wonder how nations can actually secure these critical supplies reliably when you factor in these massive environmental risks, the geopolitical competition. It's incredibly complex.
It absolutely is. It's not straightforward at all. And that complexity is probably why you saw Sibanye-Stillwater CEO Neil Froneman making that call recently.
Urging Western governments to step in.
Yeah, urging them to implement price guarantees for critical minerals. His argument, essentially, is that Western companies need that kind of backing to compete effectively with state-supported Chinese producers.
Because the playing field isn't level, is his point.
Right. He's pointing to subsidies, long-term state planning in China, and arguing that Western governments need a different strategy to ensure supply security. It reflects that growing anxiety about China's dominance in the sector. It's not just about finding this stuff, it's about securing it ethically and reliably.
Which might mean more government intervention, even in pricing. Interesting.
Yeah.
Okay, so wrapping this up, it's been a really packed deep dive into just 1 week in mining.
A lot happened.
Yeah. We've seen this global race for critical minerals accelerating, governments getting much more hands-on with investments and tariffs, policy playing a huge role.
And at the same time, these stark reminders of the environmental impacts and these serious operational security challenges that persist.
They're all interconnected.
Definitely. All these threads are tangled together, shaping markets, yes, but also geopolitics and, frankly, the planet's health. It affects you. It affects all of us. So thinking about all this, the rising demand, the competition, the risks, here's something to chew on.
Okay. How do you think nations are actually going to balance that intense need for resources with the absolute necessity of protecting the environment and ensuring ethical sourcing in the years ahead?
That's the big question, isn't it? Finding that balance.
It really is. And how we answer that will likely define a lot in the coming decades.